It's been a long time since I recorded the last global macro video because most of the time nothing is really happening. I think the opposite is true right now. There are three different topics I want to talk about that I do not think the market is currently appreciating properly. I want to talk about China and what I believe they are trying to do, why they're cracking down on all their tech businesses. Then I want to talk about JPow and the Fed and its implications. And then I want to talk gold and crypto. Let's begin with China. We are looking here at the S&P 500. It's gone straight up in a very controlled fashion. But if we take a look at three of the Chinese stocks that are very popular, one being NIO, and I used to be a huge fan of the stock. I'm still a huge fan of the company, but I don't want to touch the stock anymore. And if we take a look at Baidu, the chart also is not pretty. Or if we take a look at Didi, let me change here the time frame to 30 minutes. It is also not pretty, and I think there is a reason why. Because the market is slowly understanding what China is trying to do. China has learned from the West and from its own country that the biggest problem that exists in society is the wealth gap. And they are committed trying to change that, trying to avoid the divide between the rich and the poor. And because they don't have to account for any voters, they can just push anything through that they ever want to come up with. They will make it happen, I believe. And I think ultimately they will force all their Chinese businesses to delist in the US. I do not believe that the current shareholders of NIO, Baidu, or Didi are understanding the risk they are taking if they are currently long Chinese stocks. I think they will get delisted, not by the US, but be forced to delist because of the Chinese government. I believe the intention is to make Chinese people the shareholders of their best businesses. So I would not be surprised if at some point the Chinese people will be given shares of all of their big tech companies so that everybody can become wealthier when their businesses succeed over time. And at the same time, I think China will exclude anybody else, any other country, from investing in their businesses. That is my personal opinion. I have not heard anybody say that, but I think that is their intention. I know it sounds radical for Western countries, or especially for America, but if we really think about it, how is the wealth gap created? We have people who live paycheck to paycheck, and they never even would consider to invest in assets or in stocks or in crypto because they are just concerned about how can we feed our families. So how are these people ever going to become wealthy if they have no way of saving and putting that money somewhere where assets can appreciate? So they will stay poor. What about the other people? People who have too much liquidity, too much money. What are they trying to do? They are forced to find a home for that money. And they have to educate themselves what to do, how to save on taxes, where to put their money, that the money actually works for them. What if the Chinese government starts handing out money to its citizens, not to spend on stuff, but to invest in Chinese stocks? Then all of a sudden, the entire population becomes a shareholder of its own economy. And the people then are forced to think about investing. Where can I put this money that it gets the best return? And it wouldn't even cost that much money, because if they were to hand out that money on a monthly basis, over the years, the compounding effect of these returns would have huge implications on the wealth of its citizens. And the wealthier they become, the faster the economy can grow, and it becomes a self-fulfilling prophecy. I think that is where China is headed. And I think that is terrifying, not because it's a bad idea. I actually think it's a pretty good idea. But it would supercharge the Chinese economy. And it would also imply that the Chinese economy becomes way bigger than the US economy, way faster than the market is currently appreciating. And that can be dangerous, depending on what is the political goal for China in a global scale, which that part I don't know. But it is definitely something to keep an eye on and to be aware of, that this is where we could be headed. The next thing I want to talk about is the US stock market in general and JPow and the Fed. Because since the March 2020 lows, we've gone straight up, and the best strategy has been to buy every dip. I think this will soon change because we are entering a new phase, and I think we will be headed for some sort of stagflation. The Fed tries to convince itself and everybody else that inflation is transitory, is temporary. I don't believe this will be the case. I think the pandemic caused the perfect storm. All companies were forced to go digital and become extremely lean. They realized when we raise prices, we can actually still move our products. So they have become way more profitable. And it makes very little sense for them now to lower prices again. And the question is, will they even ramp up production back to those levels prior where the margins were lower? I don't think so. And the other factor is, what about the employees? Are they still willing to work for the same wage than they were before? I believe the answer is no. We handed out so much money that people have become more accustomed to spending more time at home. And if we have the businesses realizing we can handle all this with fewer employees, we just don't lower our prices anymore. We have high margins. Maybe we don't have the same amount of output. And the people say, you know what, if I work, I want to get paid more. Then we have something that will cause inflation, because the companies will not lower prices. The people who want to work will only work if they get paid more. So what happens then? If the people are getting paid more and the companies say, oh man, I get away with raising prices, it becomes like this self-fulfilling prophecy that prices continue to go higher and inflation ain't transitory. This can have huge implications for JPow and his printing press, because if we have higher inflation, usually we would raise interest rates. But if the companies as a whole decide we don't want to ramp up production the way we did before the pandemic, we want to be leaner, more profitable. That means less output as a country, less GDP, or just not as fast growing GDP, and then higher interest rates on top of that, because we need to control inflation. That is a very dangerous combination, and I think JPow will find himself trapped, because it becomes a balancing act between controlling inflation and not totally destroying GDP. And I think this will cause a lot of volatility, and the slow grind that we've seen for the last year and a half or so is pretty much over. At least I believe so. And this brings me to the last topic I want to talk about today, and that is crypto and gold. And here I have Bitcoin on top, and the orange chart here that is flatlining at the bottom, that is gold. Since the summer of 2020, crypto has gone straight up, while gold and gold miners have just frustrated people. So everybody convinced themselves now that crypto is digital gold. So they abandoned gold and gold miners and went all in on crypto. Try to find somebody under 70 who still believes in gold. They pretty much don't exist anymore. I think long-term crypto is way better positioned than gold. But short-term, I think there are too many people on one side of the boat, and that usually means that the consensus is wrong and there will be pain ahead. And I think over the next year or two, gold and gold miners will outperform crypto. I am pretty sure that a lot of people will disagree with the points that I'm making here today, but that is exactly why I'm making them, because they are non-consensus. All what I'm asking is, please keep an open mind. the more convinced we are of our own opinion, the more likely it is that we are wrong. At least in the stock market, that's how it works. Because these pundits on TV, they all talk the same stuff. Because if they all form the same consensus, and the consensus then turns out to be wrong, none of them is facing career risk, because they can always say, hey, but everybody was thinking that. And this industry is full of misinformation and incompetence. So please keep an open mind. Think for yourself. And maybe there is a reason why most professional money managers underperform the market, most mutual funds underperform the market, most hedge funds underperform the market. I think if we think for ourselves, invest in businesses that we understand because we are a customer, we can beat these fat cats and become way better investors than these professional idiots.